But one farmer says, seems to me there was a tea party in Boston that was illegal too.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Well, some people still think it's money.
We'll take a moment this morning to peruse some artwork that was sent to me by Mrs. Maltby. She found this artist today while perusing some things online. And as you can see, he does quite an exquisite job covering the modern U.S. bank in all of its splendor on your average American street corner or downtown environment. Just these beautiful towering institutions and establishments of finance and wealth. And here you can see them all lining the streets, everything from Chase to Wells Fargo, just sitting there enjoying their views. Look at that, just glorious paintings. And the artist's name here, coming up at the end of these paintings, you'll see, is Alex Schaefer. And go give him a stop by. I think he's got a website, and he sells copies of these paintings if you were so inclined to have your office decorated with such beautiful pieces of modern art and architecture. Welcome back to the Junius Maltby channel. Thanks for joining us today. Let's take a look quickly at metals. They really did pop and bounce this morning. Gold's been fluctuating this morning up anywhere from $48 to about $50 an ounce, up a good 3%, hanging out at the $1,640 range. So well above that $1,600 mark again for gold. Silver up 4.37%, so a little bit stronger percentage gain in silver there, up 61 cents currently at $14.59. Again, it's pretty significant, being that it bottomed out at $11.60, $11.96, something like that, when we saw that major paper dump. But again, of course, nobody was selling it for that. Nobody could find it for that. It was merely I mean, what do you even call that? It was just a number up on the boards, up on the screens, a number percolating around the internet that no one sold. I mean, I would like to meet one person who actually locked in and acquired physical silver for the lows that we saw earlier in the month. It just didn't happen. So in that case, what do those prices, what do those numbers even mean? And we're going to get into some silver supply stuff. I know Sal did a really good story on this yesterday, Salvate Metal, about the major mine shutting down in Mexico, because Mexico is a major supplier of physical silver. So we're going to take a look just briefly on that. I don't want to rehash the topic too much, because I'm sure any one of you who saw that are already in tune with that information and know what's going on. I do believe we have seen the bottom in silver. As you can see, supply crunch, Mexico curtailing production, silver shock update. We've talked about this, the supply shock, a new and major threat to supply. We're going to bring those charts up. Mexico's mining halt to hit silver supply. Mexico mining suspension to hit silver supply. All the headlines are out there. This made big news. Sal covered it. But let's take a look at these supply charts. So as of March 27th, this chart shows the amount of monthly global silver production that is currently offline. Okay, this is silver that's been taken offline, a percentage of the production. Now check it out here. You got a COVID-19 effect on monthly silver production. So Canada, they're offline. There you can see how much. Argentina, Bolivia, Chile, Peru. World production offline exceeding 30%. So roughly 32% of all the silver that gets mined around the world, much of it as a byproduct, is currently out of production. So based on 2018 supply figures, the 2019 stuff's not available yet, this represents about 23.1 million ounces per month. And I was talking to Paladin Stacker about this recently, and one of the points I brought up was the demand. There is a certain component of the demand out there where silver is applied, whether it's industrial, bullion, you name it. And that's not going to diminish or go away. If anything, one could argue, based on what we're seeing economically, the demand for much of the physical side of silver in the form of bullion, rounds, and bars has increased. Now, not all silver that's mined is destined for bar and round production, aka bullion. A lot of it gets consumed in other areas, and it leaves only so much for bullion production. And that is why whatever was allocated for bullion production, follow me here, from last year and exists, whatever physical bullion exists currently, is currently not being replaced. Because again, not only have the mines shut down, but the assayers, the refiners, all those guys that purify it and make it into products, plankets and bars, in the mints, etc., the mints who strike blank plankets, all of that has ceased operation, right? So the only thing we're looking at is whatever currently exists, the physical supply. That's like a cookie jar. There's no more cookies being added to it, but you got the cookie monster with the lid off, gobbling up the cookies. Silver is the cookies. As long as no one's baking them, as long as no one is making batter and making more cookie dough, we have a problem. Because eventually the cookie jar is going to run out. And I think the silver cookie jar has run out, essentially. There is some physical remaining. You're seeing it on some sites, but again, the 100-ounce bars are gone. Many of the 10-ounce bars are gone. And the lag time in supply is pretty huge. I don't think it's going to be replenished in a timeline that any of us can really comprehend at this point. We're going to move on here because I want to show you one more chart to show you how dramatic it might actually be. Because this estimate of 30%, 32% might be an underestimate of what it truly is. And remember, this is also happening with gold. A little more dramatic, I believe, on the silver side of things, but this is also happening to gold. Now look here, companies operating in China and Indonesia have not publicly reported on their mining operations. However, based on various news reports, we can guesstimate how much production is offline in those two regions. If we add in estimates from known public sources, here's how much silver is not getting produced. So again, monthly silver production. Now this is including China and Indonesia. And this is obviously due to the recent events, the effects of this COVID. So you've got Indonesia there. They're about, 5%? I'm not sure. China, greater than 12% global production for silver. And then you got all the other nations there below that we talked about. World production offline, 51%. A little bit bigger number there than the 32 we just talked about. So imagine 51% of the silver is no longer produced. Let's go back to the Cookie Monster analogy, if you guys enjoy that, if it's fun. Pretend for a moment Cookie Monster's caretaker, whoever that might be, is making 12 cookies every day. And Cookie Monster eats, I don't know what the rate of cookies he eats, but if he's gobbling them up at a particular pace, and then all of a sudden, instead of making 12 cookies a day, Cookie Monster's mom only makes him 6 cookies per day. That's a dramatic decrease in cookie production. And if he's consuming them at the same rate, let's say a cookie an hour, he's going to run out pretty quickly. And that's what's happening with silver. And again, not all of those cookies, we're going off the deep end here, not all of the silver mined is destined for bar and coin production. So when you look at the amount that is, I don't have the pie chart in front of me right now, but if you ever look at a chart of silver production, you can really see where it's allocated, how much of it goes towards like the solar panel production, electronics, and so on. It's not a very large percentage that goes towards bars and coinage. And so you've got only so many huge dealers around the world and mints issuing these products that you and I value and place our kinetic wealth into as far as physical bullion. And that's why I think it makes a lot of sense that the supply diminished and ran out as quickly as it did. And why I also believe it might not rebound as quickly as some people think. It's going to take a while for these mines and operations to get up and running again. It's going to take a while to get the shipping lanes back open again. And then the mints have to fire up, start making these products, and then sending them out. And there's also going to be kind of a residual demand. There's a lot of people that are that now are, I think, aware, more awakened to, wow, I went to sleep. I need to stay awake because that could happen again. There might also be a lot of people waiting to basically acquire physical because they know what's coming next, and that is the inflationary and the hyperinflationary reactions to all of the Fed activity, the bailouts, the stimulus, all of these injections of fake funny money, and the monopoly money situation that we're facing. The financial world, the global economy, is on fire, much like those paintings we opened up the video with. That's kind of why we did that. And the best fire insurance you can have for your wealth is metals, gold and silver. I think a lot of people know that, even subconsciously, people that aren't really that into it like we are. And I think what's going to happen is once the supply, even in the production, gets back online and even achieves a normal pace, you will still see heightened demand and kind of a diminished supply side for quite some time. Prices might come up significantly based on that. Obviously, I can't predict that. And if they do, you'll see some people kind of motivated to sell, I'm sure, as with anything. But overall, I think we're going to see a pretty tight supply side for silver for some time. Back talking about gold, it did jump today. We talked about that. Based on, according to the headlines, the record U.S. jobless claims, lifting that safe haven demand. Obviously, people are worried about the economy right now and the direction that it's taking. There was a record 6.6 million Americans seeking unemployment benefits last week. I've seen numbers even as high as 10 million jobs being wiped out and individuals seeking unemployment for them just in the United States based on current events. These are record numbers, unprecedented. We've seen those estimates and we talked about them as high as even 37% maybe coming out of this. You've got entire sectors of the economy frozen. Restaurants, a lot of that part of the economy there, bars, waiters, waitresses, bartenders, and a lot of that is just not happening right now. It's not even, they're not even capable of going to work, earning an income, producing anything, and as well as other, what they consider, quote, non-essential occupations. There's just a lot of people not able to work right now, which is essentially grinding the entire economy to a halt. And I'm not saying this is the same thing. We've talked about it as far as a parallel, but it's not exactly like what took place during the tail end of the Roman Empire. But remember, we covered that years ago, and what they talked about there was that breakdown and that almost like frozen trade when the people who were shipping products and moving things about, that the trade, the movement of goods and services within the empire, when that froze, when it stopped occurring, mainly because of the breakdown in the currency, the whole thing destabilized after that economically, and it just kind of fell apart. You can't have an economy just stop for a long period of time without having significant ramifications and negative effects going throughout the economy. Everything's interconnected, you know that. There's the production side, the shipping side, the distribution, and all of these different things, for everything that we talk about, everything we look at, everything we hold, whether it's a coffee mug, a pen, a sheet of paper, everything has its role, and it has a place, and on all the people out there that have their jobs. So it's going to take a while for this to heal and to be fixed. And obviously, they don't have the answers in Washington. They're not going to do it. $1,200 to each person is not going to fix this. $500 billion to the banks, $1 trillion here, $1 trillion there. None of that's going to fix it. If anything, it'll make the problem worse. Kicks the can down the road. Just like Peter Schiff talks about, they're just reinflating the bailout bubble. They're not fixing it. There's a leak in it, a hole in it, and all they're doing is pumping more air into it. They need to let the bad assets, the toxic assets, the bad institutions, the malinvestments, they need to expire and go away. Now, some of the leading financial institutions out there are predicting that this is going to last quite some time, that we're entering the deepest recession on record, and why this recession could last much longer than the last incident we experienced back in 2008, 2009. And I think the reasons for that are quite obvious. This is a much more systemic, much deeper and prolonged event, the effects of which have really affected every corner of the entire global economy rather than just certain sectors. Now, what this is going to mean, catastrophic GDP declines, worse than the Great Depression. It's going to take people doing the right thing, making the right decisions, helping each other out. Obviously, those of you out there who have acquired precious metals have sought some form of financial shelter in preparation for things to come. And the tail end of this, or the light at the end of the tunnel, if there is any, out there, I'm sure there is. It's going to be a different world when we pass through this to the other side. It's going to look a lot different than it does today, and there's going to be, I'm guessing, some significant changes in the way things are done, but also in just the way the economy looks. The numbers, the way people invest and save, where money is. I don't know how they're going to wipe a lot of this debt off the books. I don't know what it's going to look like. There's a lot of people that are going to not be able to pay back what they owe. Just yesterday, I was looking at some numbers from an article my brother sent me about how the average American, not even the average, I think it was the majority, it's like 80 something, there was a percentage attached to it, 80% or something like that, of Americans could not come up with $400 in case of an emergency. Can't even come up with $400. Most people are in significant debt. Look at Vegas, for example. That was an epicenter during the last housing crisis. People there really overextended with their mortgages, taking on extra mortgages, having rentals and things like that, armed loans. And a lot of those loans were ninja loans. No income, no job, no assets, no credit, no problem. They got the loan, and they might have had just barely enough to cover the mortgages with people renting from them. When that mortgage crisis hit, it really impacted and hit that region. Now, a lot of that behavior still exists. A lot of that over-exuberant investing ideas. I personally know a lot of people that really overextended, in my opinion, into the real estate realm during the recent last couple of years. Now what they're going to have to deal with is coming up with and covering mortgages or rents with tenants that might leave or abandon the property, not unable to make do with rent. And you're going to see a lot of those loans falter. And of course, we know how that works with mortgage-backed securities. They're all tied to each other. It's like a domino effect. They start tipping, and pretty soon you have these entire bundles and packages of various loans becoming toxic and causing problems on the books for financial institutions. And I think that's going to happen regionally. I think we're going to see a major effect in the real estate market here as people start to default and miss loans and unable to pay them back. It's going to have effects, long-lasting effects. And not only with the employment side, just think of all the different parts. You can't look at a single section of the economy without seeing what's taking place now having a dramatic negative effect on it, really. So keep your eye on it. Stay tuned in here. Today's not one of the bigger news days. I just didn't want to come up with, there's not a whole lot to talk about. It's the same old thing, and it's almost fatiguing to look at these constant cycles of information that are coming out. The theme, we all do, and now we're kind of in the midst of it, and it's just basically hunkering down, watching it unfold, and it's really like a slow motion train derailment. You're just watching it very slowly careen off of the tracks, off of the bridge, and just this pile up wreckage slowly take place. Not a whole lot we can do about it at this time, other than, watch. We're covering the facts as much as we can. We're looking at different things here and there. That's what it is. Join the conversation down below in the comments. Engage in the discourse here on the Junius Malpe channel. Appreciate all of you who are out there who support this channel, take part in the conversations. Appreciate it. There was a few of you that actually donated yesterday and showed your support for the channel. Much appreciated. To whoever the anonymous friend of the channel is that sends some Bitcoin to the little Bitcoin address down below, much appreciated. Your support is valued, and every time I see that little surprise show up, I'm able to use it to help the channel out, and it is, again, very much appreciated. I'm humbled by the support that all of you have shown in motivating this channel, keeping it going. So thank you all, and have a good rest of your day. Keep stacking, and be healthy, be well.